Last year, if the Fed had been a corporation, it would have been the most profitable corporation in the world. It earned $108 billion. Apple earned $100 billion. Apple paid $19 billion in income tax. The Fed, on the other hand, gave the government all of its earnings, and then some, $109 billion. The Fed is required to hand over all of its profits to the government every year. So this was just the latest in a long line of huge remittances from the Fed to the US Treasury Department, as shown here. The Fed has given the US Treasury Department $1.8 trillion since it was created in 1914, with $1.1 trillion of that given after 2008. The Fed was profitable, very profitable, before 2008, but its profits became very much larger afterwards. These remittances from the Fed have reduced the government's debt by not just $1.8 trillion, but by $1.8 trillion plus the interest expense that would have accrued on that $1.8 trillion of debt over the decades. Now, however, the Fed's fortunes are changing dramatically. It began losing money in September, and next year it could lose $50 billion or more. This video will explain the causes of this radical reversal of fortunes and discuss how it will impact the Fed's future operations. It will also point out how Congress could make the Fed enormously profitable again and thereby lower the U.S. budget deficit every year going forward, since the Fed would remit its future earnings to the government. The Fed's profits soared after 2008 because of quantitative easing, which began late that year. QE is the process through which the Fed creates money and uses it to buy financial assets, comprised of Treasury securities and mortgage-backed securities. The Fed's total assets increased from $890 billion at the end of 2007 to $8.9 trillion at the peak earlier this year, an increase of more than $8 trillion. In this process, the Fed acquired an additional $5 trillion of Treasury securities and $2.7 trillion of mortgage-backed securities. The Fed earns interest income on all of those bonds. It earned $102 billion of interest income in 2020 and $123 billion of interest income in 2021. Of course, the Fed's total liabilities rose in line with its total assets.